Hello traders, welcome back to this channel. For those people who are watching this video for the first time, please show some love by subscribing the channel. Our aim is to make ICT concepts digestible to anyone and to have a clear notes on what you can reference on at any particular time you want to. So today we want to finish on order blocks topic. We are starting by bearish breaker block and bullish breaker block. The first thing before identifying this thing, you should know how to identify the anticipated bearish institutional reference point and anticipated bullish institutional reference point, like I said on the video that we did the past 1 week ago. So bearish breaker is a bearish range or a down close candle in a most recent swing low prior to old high being violated. When price returned back to the swing low, this is a selling opportunity worth considering. So what are some of the characteristics that you will observe in the market? As you have already identified, anticipated bearish institutional reference point, you would like to see an old high being violated. This old high being violated. The raid on the buy side liquidity indicates that buyers are trapped long. So this one indicates that buyers are trapped long. Then after that, you'll be patient and wait for this swing low to be violated by a down close candle. And you still want to be patient enough to wait and for this retracement for you to buy, sell at this particular point. So MSS broken lower and retracement is our new selling opportunity. So this is market structure shift, a shift in market structure, which means the market will shift direction to go lower. So your selling opportunity is going to be around here when the market comes back to that particular point. What will distinguish you from the rest of the guys who are trading other concept is your ability to know when to place a trade using this concept. So that will come by you backtesting, not just learning about the concept. And the bullish breaker is a bullish range or a up close candle in the most recent swing high prior to an old low being violated. When price return back the swing high, this is a buying opportunity worth considering. So you'll be patient enough to see the swing high being violated, and you will also be patient enough for you to observe the market and see a retracement back to that swing high that was violated and take long trade off that area. And you must always observe an MMS is being broken higher and retracement will be our buying opportunity. Okay, we have what we call reclaimed ICT order block. So what are reclaimed ICT order block? So when you go to this, you will understand more of this concept when you go to a video series on ICT known as the market maker model. Go and watch that videos for you to understand in depth about this concept. So bullish reclaimed order block is a candle or a bar that was previously used by a buy price and short term bounce confirms minor displacement. In the buy side of the curve, the old blocks will be reclaimed long. And a bearish reclaimed order block is candle or a bar that was previously used to sell price and the short-term bounce confirms minor displacement. In the sell side of the curve, the old blocks will be reclaimed short. So they act like a low resistance opportunity areas that will just be passed. So that is why they are being reclaimed. But for you to understand this concept in depth, you go and watch the market maker model. It's on ICT YouTube channel. And okay, we have something we call the bullish propulsion order block. What are bullish propulsion order block? Bullish propulsion order block is a candle or a bar that was previously traded down into, and a bullish order block. So we have a bullish order block here, and the candle that trades in the bullish order block is called the bullish propulsion order block. And we have a good hint here, guys. You don't want to see the market coming back and trading against the bullish propulsion order block. Like for this case, we don't want to see this candle trading down to the bullish propulsion order block that we have highlighted with our yellow orange color, I mean. So you don't want to see price moving back to either block. If so, then that might indicate that the setup is invalid. So that is how I usually identify that some of the bullish or bearish order blocks are not working, and I immediately close the trade because I know what I'm looking for. And a bearish order propulsion order block is a bearish propulsion order block is a candle or a bar that was previously traded up into a bearish order block and takes over the role of a price resistance for lower price movement. So guys, these are just to indicate and give you more hint on when to close trade and when to leave your trade running to that target that you have set. It will help you in trade management and trade entries. So that is how you will exactly know what you are doing, and it requires a lot of patience and it requires a lot of discipline for you to sit and observe these markets. So the only thing that will distinguish you from the rest of the traders who are trading a city concept and not seeing profitability is you going back and backtesting this concept over and over again so that you can build that courage and also build that neural network in your mind so that you can be confident, know what you have observed. Because somebody you have observed something over and over again is very different from somebody who is observing it for the first time. That is where experience comes from. Okay, we have our last uh, our last concept on the topic order block, and it's called the vacuum blocks. In the vacuum blocks, we also have the bullish and the bearish vacuum blocks. And these vacuum blocks, they occur in major events, and they can also occur when the session opening is occurring on Sunday. So the events that can cause this is as a result of high liquidity in the market that will cause that gap, and that, like the news on non-farm payroll and session opening on Sunday, can cause this gap. And this gap are not special. They can just be traded like you are trading the FVGs. You can trade the FVGs on the 50%, and some FVGs are always being closed entirely before the trade moves higher or lower, depending on which type of trades you are looking at. So the same way you are trading FVGs is the same way you will be trading the vacuum blocks. That's why I've indicated here candle. This candle is just made candle to fill in that gap, to help you realize that it is nothing other than the FVG, but indicated by a gap, which was as a result of a high liquidity or high impact, or by high impact news or a session opening. So guys, that is all about the topic order blocks. Please consider subscribing. Our aim here as Titans is to make ICT concept understandable to everybody and get everybody to access clean notes so that they cannot have any other excuses but go back test them to make money off the market. So until then, let's meet on the next one. Have a nice holiday.